What's going on, everybody? This is Jeff with AltCoin Buzz. So today we're going to talk about Bitcoin. The reason we're going to talk about Bitcoin is because Bitcoin is the X factor. It's the original. It is the one that drives the market historically. So we're going to do some historical tracking, and we're going to flash back to this time last year, and we're also going to look at some things involving Elliott Wave and just give you some quick introduction into that to get your guys' technical analysis minds working, because I know a lot of you guys are seeing this conversation come up and asking about what that means, and we're going to kind of do the introduction to it in this video. But first and foremost, you can see Bitcoin is kind of running sideways right now, potentially creating a new support level around the $8,000 mark. We'll see how long that holds. It would have to be for a week or two here to really be a strong support. But I want to take it back all the way to this time last year. Okay, you can see right here, here we are, January 4th, okay, 1181. Okay, if you remember this year, I think January 8th was a big day for the market. But back then, in this particular time frame, Bitcoin dominance was pretty high for the majority of the year. So Bitcoin made up most of the market back at this time of the year. And if we just kind of zero into that, we can get a little bit more understanding about exactly where that was. So, yeah, I mean, February, let's go all the way back to January here. So you can see around about January 5th, it was 86% Bitcoin dominance. Currently, right now, we're at 34%. So market conditions have changed, so it's important to put that out there. What we're going to analyze here is the market back in January. Okay, so January 4th, it hit 1137. It didn't revisit that price point until around about late February. So if you were invested in Bitcoin at that particular time, you had watched it already hit a peak and kind of retrace, right? Now, the graph's not the same as it was this year, but you can see how Bitcoin has been known to do this where in this time of year right here. You can see even when they thought they were out of the woods, us investors that were invested in Bitcoin at the time, we saw it's 1247 here, and then it goes back down again, right? So from about January to around about late April, the market was running sideways, and it wasn't doing much. There was a lot of red, okay? There was many days where you would see red. Some days you would see green. Yesterday was green for us, today's a red day, right? So there's that bouncing back and forth. And the reason I point this out to you is to show you that this time last year, this was the case. And the market didn't really pick up. That's why if you listen to several veterans in cryptocurrency, they suggest that it might not be until the summertime that we see this thing run. So why am I making this video? Well, it's to let you know that you might have to prepare for that kind of run. You might have to wait it out. It might get a little bit boring for you here while you're holding your Bitcoin and your altcoins. So even when it did peak, at 2,722, this is when it really started to catch momentum, but then it fell off, and then June was a really strong month, and then it was like, oh man, again, and then September had a China situation occur, and if you just drill it all the way down to there, you can see it kind of picked up early September. It was strong, but then around September 5th, it really got pretty nasty, and it fell off, and on this particular night, I remember it was only 7 months ago. I remember going to bed saying, oh boy, cryptocurrency's in trouble. And I woke up and it had rebounded. So the market can move really quickly, right? You can swing in one way or another. I'll never forget that moment, because I went to bed saying, oh geez, this is not looking good. I just bought a whole bunch of Bitcoin and Ethereum around that time frame. And I was like, wow, okay, whatever. But I remember just this little thought in the back of my head wanted me to I was in bed when I was looking at the chart, And I wanted to jump out of bed and go buy more Bitcoin, but I said, oh no, man, what if this thing's really in trouble right now? But like I said, I woke up the next morning and it rebounded, and then it kind of ran sideways for a while. That's why I would say the real strong resistance for Bitcoin is around the $3,000 to $4,000 range. That's kind of where I see the real strong resistance, because before we get to this real strong resistance, which I don't think we'll get to, but what do I know, right? I mean, no one can predict or project any of this stuff. Even the people reading Fibonacci or Elliott Waves, they're all we have to go off of is previous support, right? So this is the area where I think there's going to be the most support. Between, I don't know, I want to say about the $4,000 level would be like a really strong support area. But people are suggesting that this area here at 5,000 will be a strong support level to hold it. That's why people are saying, don't be surprised if we touch back down on that. So I point all this out to you to give you more advanced things to look out for. I mean, advanced lookout points, right? It's like, prepare for this. Be prepared because you might have to wait it out. Okay, forward thinking, advanced thinking. Now, as far as what we have going on with Elliott Wave, so you have Fibonacci. There's basically, so this is a Elliott Wave. I'll just go all the way up here. This is on Wikipedia. You can find it on Investopedia. I like Wikipedia, even though some people, scholars, don't necessarily recommend it, but Wikipedia has gotten to a point where it's really just truly awesome. Elliott Wave principle is a form of technical analysis that finance traders use to analyze financial market cycles and forecast market trends by identifying extremes in investor psychology, right? Highs and lows in prices and other collective factors. I guess you could say, just like how sometimes your girlfriend or your wife is a little bit moody and then she's like loving you again. It's kind of like that kind of psychology where the market kind of downtrends in a wave cycle, up, down, but downtrending, right? And here's, you can read the foundation, but obviously if I were to read all that, then I'd just be lecturing, right? So this is where I think you're going to find the most interesting information if you wanted to come read it, but I'll give you just a brief insight into it. Wave 1 is rarely obvious at its inception. When the first wave of the new bull market begins, the fundamental news is almost universally negative. So by this time, they're saying that investors will be in such a bad mood that even the sign of a little bit of sunshine will be perceived as a negative light. The previous trend is considered still strongly in force. Fundamental analysts continue to revise their earnings. Estimates lower. The economy probably does not look strong. Sentiment surveys are decided bearish. Put options are in vogue, and implied volatility in the options market is high. Volume might increase a bit as price rise, but not enough to alert many technical analysts. So by what they're saying is, let's just say we go into April or May with this bearish trend that we're on. By that time, many people will be exhausted and fatigued with the downtrend, the wave downtrend. And even when the light looks to be peeking out, people will be scoffing off saying, no, probably not enough to get us out of the woods. So be on the lookout for that, right? Wave 2 corrects Wave 1, but never extend beyond the starting point of Wave 1. Typically, the news is still bad. As prices retest the prior low, bearish sentiment quickly builds, and the crowd haughtily reminds all that the bear market is deeply ensconced. Wow. Still, some positive signs appear for those who are looking. Volume should be lower during Wave 2 than during Wave 1. Prices usually do not retrace more than 61%. See Fibonacci section below. We're not going to go into Fibonacci in this one, but I'm doing a quick introduction here. Of the Wave 1 gains, and prices should fall in three-wave pattern. So they're saying that it won't reach its Wave 1 low, right? So Wave 3 is usually the largest and most powerful wave in a trend. Although some research suggests that in commodity markets, Wave 5 is the largest. The news is now positive, and fundamental analysts start to raise earning estimates. Prices rise quickly, corrections are short-lived and shallow. Anyone looking to get in on a pullback will likely miss the boat. As a wave 3 starts, the news is probably still bearish, and most market players remain negative. But by wave 3's midpoint, the crowd will often join the new bullish trend. Wave 3 often extends wave 1 by ratio of 1 to 618 to 1. Okay, so where did we see that? We saw that from, I would say we saw a wave 3 type action from probably November to December, October, maybe October, November, early December. Okay, and then wave 4, right? Let's see what wave 4 is. Wave 4 is typically clearly corrective. Prices may meander sideways for an extended period, and wave 4 typically retraces less than 38.2% of wave 3. Volume is well below than that of wave 3. This is a good place to buy a pullback if you understand the potential ahead of wave 5. Still, fourth waves are often frustrating because of their lack of progress in the larger trend. Actually, let me rescind my last comment. I would say that this probably reminds me more of what June and July would have looked like. And then this reminds me of what, because if I remember correctly, it felt, at least this is what it felt like based on the sentiment and what the charts indicate, but more directly what it felt like when I was involved in the market. And to those of you who were involved in the market, you can chime in on this. But this wave 4 probably seems like the September, and then this wave 5 probably would have been around October, late October, November, December, early January. Wave 5 is the final leg in the direction of dominant trend. This news is almost universally positive and everyone is bullish. Unfortunately, this is when many average investors finally buy in. So yeah, this would have been like this December, January, right? Right before the top. Volume is often lower in wave 5. Oh, well, I don't know. Sorry. Because the volume was definitely really heavy in December than in wave 3. And many momentum indicators start to show divergences. Prices reach a new high, but the indicators do not reach a new peak. At the end of major bull market, bears may be very will be ridiculed. Recall how forecasts for a top in the stock market during 2000 were received. I mean, we're doing this on the fly here. We're thinking out loud, but this maybe was that wave 5 kind of indicates. So this wave 4 sounds like the Christmas sell-off, and wave 5 sounds kind of more like the New Year's run. I don't know. What do you guys think? So this, it's really difficult to suggest. When you're looking at it like this, and this is not a guarantee how cycles run, although they're suggesting that it typically is under the dominant trend. Okay, so 3-wave pattern corrective trend. Corrections are typically harder to identify than impulse moves. In wave A of the bear market, the fundamental news is usually positive. Most analysts see the drop as a correction. That's what we've all been saying, right? So we've definitely seen wave A already. In a sell-active bull market, some technical indicators that accompany were A, include increased volume, rising implied volatility in the options market, and possibly a turn higher in open interest in related futures markets. We don't know what was going on in the futures markets. So this is still a new market. So some of these are, we don't have any markets, future markets data, right? Prices reverse higher, which many see as a resumption of the now long gone bull market. Are we at wave B right now? The bull market being long gone? I don't think so. See, this is why we're kind of going into this. Those familiar with classical technical analysis may see the peak as the right shoulder of the head and shoulders reversal pattern. So for those of you who don't know what a head and shoulders is, so it's really easy. Head and shoulders on a chart typically looks like, so you have this is a shoulder. Well, might have to zoom in a little bit to get a head and shoulders fully. You could almost say this is a shoulder, a head, and a shoulder. it looks something like that, like shoulder, head, shoulder. Okay, so this is kind of shoulder, head, shoulder. You'd have to really zoom in to a 7-day. Let's see if we can get it on a 7-day. It's never really perfect, is it? Here's a really nice looking head and shoulders. Shoulder, head, shoulder. Okay, so let's go ahead and dig into what they're saying here. The volume during wave B should be lower than in wave A. By this point, fundamentals are probably no longer improving, but they likely have not returned or turned negative. Okay, so if we just zoom in here to where we're at currently, right, that's what counts the most. We want to know what's going on here in the monthly. So where are we seeing something here? See this? See how it bottoms out here? They're suggesting that this might be another, we might have to go lower than this after we kind of come up. So we're going towards a head to go back down is what some are suggesting. That's why they say we might have to touch it again. So prices move impulsively lower in 5 waves. Volume picks up, and by the 3rd leg of wave C, almost everyone realizes that a bear market is firmly entrenched. Wave C is typically at least as large as a wave A, and often extends to 1.68 times wave A or beyond. So it could get pretty nasty in here with Bitcoin, according to what technical analysis, according to the Elliott Wave, indicates. So to you guys all going like this, putting your head on putting your palm to forehead, going, oh geez. Well, at least you can say, like, it's like, hey, winter is coming, you know? It's like winter's gonna last 6 months. You're not gonna see much sunshine, and at least then, hey, who knows? Maybe someone will call you up and say, you want to go to Bahamas and stay at my beach house? You know, we could get a break. That's kind of what I'm preparing myself for, and I'm suggesting that if you prepare for that, you know, hope for the best, but prepare for the worst. And if in that case, you know, many of the altcoins would definitely suffer, and we've seen that happen already. So that's why so many people are saying we might not be out of the woods. And based on the Elliott Wave principles, that would kind of indicate that that's the case. So don't shoot the messenger here. Don't shoot the messenger. But we can still analyze tech, and we can still keep busy looking at things. But we understand now the wave patterns of Elliott Wave, right? Let me know in the comments below if this was useful, and we'll see you guys next time.